There's a shifting statistical trend away from purchasing new cars and toward not just purchasing used cars, but also less expensive used cars, typically older models. There's also a shifting demographic trend wherein younger car buyers, millennials and younger, desire purely online options to make their purchases. If only there was a company geared towards catering to these shifts. Hey everybody, Walrus here from Walrus Street, bringing you a DD today on Shift Technologies, ticker SFT. Just a reminder, I am not a financial professional. All information in this video is for entertainment purposes only. So it's been a pretty bad couple weeks in the stock market. Nearly all tech stocks are just beat to hell right now. So naturally, I'm gonna go ahead and do a DD today on a tech stock, kind of. Like, it's an online car seller, so it's not really a tech stock because it's providing a physical good in the form of, used cars, but it also has a website and an app and an AI that uses machine learning to help with pricing and customer matching. Yeah, it's like one of those gray area tech stocks. Before I get started, I would like to credit none of you. None of you suggested this one. This is me. This is mine. I've actually been following Shift for a couple of weeks now, waiting for a buying opportunity. They went public last year through a SPAC merger, but I did not like the valuations at the time. And with the current market downtrend, I actually see them as one of the higher value plays for the reasons that I'm going to detail in this video. So it's like kind of a combination of like a value and a growth, but it's not really value in the sense of the word like you would think of a traditional value stock. It's more so it's really, really inexpensive right now based on the value that you're getting and the possible future return. I did look through YouTube to see other videos. There are some, and of course, it's all those videos with the sensational price targets, 5x, 10x, 20x, 100x, ridiculous gaping faces in the thumbnail, and you know how much I hate those. There was one really good YouTube DD video. Guys, please check out Matthew James' channel. He did a DD video on Shift about 3 weeks ago. Pretty good video. It's about 15 minutes long. He went ahead and time-stamped everything so you guys could go through it. Give his channel some love. I think he's sitting on like 2,000 subscribers right now, which is a damn shame because of all the work that he puts into his videos. So go ahead and check him out. But of course, I'm going to cover this one into more detail than you can usually find on YouTube. So let's go ahead and get into it. Shift Technologies. Here's their website. Right away, they tell you exactly what the business is. The smart way to buy a used car safely. Shop verified cars, test drive from home, and complete your purchase in about an hour. This right here is one of their big differentiating factors. The competitors in the space do not offer a test drive from home. Shift will literally bring the car to your home, allow you to test drive it, and if you don't like it, they'll just take it away. No pressure. Find the right car online, easily shop by what matters to you. They have a wide selection of verified vehicles. Their vehicles go through a 150-point inspection by certified mechanics. This is their reconditioning process. They do this in-house to save costs. You get the complete Carfax vehicle history report. You can see it in person. Fair, no haggle pricing. No haggle as in they don't even negotiate. The price that you see is the price that you pay. They actually offer industry low pricing on the cars that they sell, so there really isn't a need to haggle. You could book your test drive online. They bring the car to you. They have a no pressure concierge to help you along the way. They stress this in their literature. The person that brings the car is not a salesperson, it's a driver. They have competitive financing options. They do their F&I through a third party. They don't do it in-house. F&I is finance and insurance, and it's typically very capital intensive, so it's harder for companies with smaller market caps to deal with F&I in-house, and typically they do outsource it. Fast and easy digital checkout. Skip the DMV. They bring you everything you need, and they have a 7-day, 200-mile return policy. This is more or less competitive. They all offer some type of return policy. Shift's is lower on the mileage end at only 200 miles, but you still do get the 7 days, which is fairly industry standard. On their last earnings report, they said they were moving over 1,000 units per month, and that number is increasing. Why should you care? This is used cars. This is super boring because of the total addressable market. I bet you didn't know this, but the addressable market for used cars is larger than for new cars. The US US used vehicle market in 2019 was $841 billion. Of this used vehicle market, 50% was peer-to-peer, 44% was through other dealer groups, and 6% was through the top 100 dealer groups. Peer-to-peer is like selling something through Craigslist. Other dealer groups would be like small mom and pop dealerships. Maybe they got 20, 30 cars on their lot. Maybe they have 2 or 3 locations, but it's a small group. And then the top 100, those would be the big dealer franchises. Now, the industry is ripe for disruption. Consumers are trending towards online purchases, not just in this industry, but in general. COVID is bringing about a shift away from public transportation towards personal vehicles. To some extent, the people that typically use public transportation might be more interested in purchasing a used vehicle than a new vehicle. There's limited digital adoption in used cars. The e-commerce market penetration remains light in auto retail. Now, this is different industries for e-commerce. Apparel, 32% online. Shoes, 30%. Groceries, 9%. This is one of the recent entries. Auto retail is still less than 1% penetration. So right here, you can see the potential for multiples of growth. This isn't even about which used car company gets the lion's share of the market. This is about the fact that the market itself can 20x just to hit the average of the digital adoption in the other common consumer spending industries. The used car boom is one of the hottest and trickiest coronavirus markets for consumers. It's led to an increase in used car sales. People avoid mass transportation, and they're more sensitive to auto costs during recession. Used cars fit both their needs. You don't have to use public transportation, and you don't have to break the bank at a time when a lot of people are really struggling for money, hurting for jobs, having a hard time bringing in extra income. Consumers can find a greater inventory online. Dealers are accelerating digital efforts, but it can come at a premium, and demand is driving up prices. Total auto sales for secondhand vehicles have increased twofold compared to new car sales in the US. Over time, the recorded data has shown that the number of new car sales has never exceeded the number of used vehicles sold during the same reference period. 40.42 million used cars were sold in 2018 compared to just 17.2 million new vehicles. Similar used and new car statistics have been reported annually for the past decade. So we've got a consistent trend here going back a decade wherein used car sales are increasing, new car sales are decreasing. The highest number of car sales is most often recorded in California. 2018, a total of 896,000 personal vehicles sold in the state. This makes sense. California has the largest population. Texas ranks third on the list with 450,000 new car sales in 2018. Now, the reason that I highlight California and Texas is because right now, Shift has most of its distribution centers in California, Oregon, Washington along the West Coast, and it just opened up a center in Austin, Texas. So it's already hitting 2 of those 3 largest markets, plus Washington and Oregon. In 2020, we did have COVID. Overall vehicle sales fell. 9 million new vehicles sold in 2020, down 28% from 2019. Used vehicle sales were down in 2020, 40 million down to 34.1 million. The used vehicles, even in a down year, were only down 15% compared to the 28% of new vehicles. CPO vehicle sales were down 2020. CPO is certified pre-owned. These are like the barely used cars, the ones that go through the full restoration process, and when you buy them, they're like new. CPO vehicle sales were down 2.8 million to 2 million, which is 28%. So CPOs are treated exactly like new vehicles in terms of the decline in sales, but used cars, not CPOs, just used cars, older cars, didn't have that much of a decline. Shift focuses on older used cars, not necessarily CPOs. Also, the average transaction price is increasing, 3.5% increase. These are the important factors consumers are looking for: quality, affordability, customer service. Affordability is a big one here, and that's one that you really want to consider with used cars. Consumers want their own vehicle. 1/3 of consumers without a car plan on buying in the next 6 months. 78% are more likely to use their own car post-COVID-19. Who makes up the car buyers? 23% are millennials. This is one of the largest groups that is using Shift. For online car buying trends, 18% would purchase sooner if there was an option to online. 48% want to handle price negotiations online. 42% want to handle financing online. You can see this is an increasing trend, and this is something that Shift is catering to. Now, I know somebody's going to raise the point, if Shift is selling older vehicles, what about EVs? A lot of EVs are newer. So that's a very good point, but you have to realize that EV sales were slowed by COVID. They are showing signs of growth, but it's still not widely adopted. Consumers value affordability affordability and quality over sustainability. So this is a big boon towards the vehicles that Shift is offering, even though they're still fossil fuel based. Consumers take advantage of low oil prices. Digital becomes more important along the entire purchase funnel. Less than a third of younger consumers prefer conducting car sales and after sales in person at a dealership. Respondents are even more interested in contactless services. Approximately half of respondents are willing to pay extra for the service. Consumers, particularly younger consumers, don't even want to deal with a dealership. They just want everything to be online. This fits the trends of like every other industry. So we can see, like at the beginning, we talked about that $800 billion plus addressable market, the fact that e-commerce is less than 1% penetration of that market, and we've got younger consumers that have a desire to do more stuff online. There's room for growth for a lot of competitors here. The first one is KMX, Carmax. You can see they're sitting here about $123 a share. Market cap is about $20 billion. Next up is Carvana, sitting at about $260 a share. Market cap is the highest of the ones we're going to look at, almost $42 billion. The other big competitor that recently IPO'd is Vroom. Vroom is sitting here at $32 a share, market cap of only $4 billion. So of the three that we're going to be looking at mostly today to compare with Shift, Carmax is the oldest, Carvana is the largest, Vroom is the smallest, but Vroom is still much larger than Shift. Now, I know somebody's going to say something about lots. Why don't I cover car lots as a competitor? They also just recently began being publicly traded. Lots is kind of not really in the same areas that Shift is right now, so they're not really butting heads. Lots is based out of Florida, Virginia, Illinois, and Seattle, and Shift is in California, Oregon, Texas, and Washington. They overlap a little bit in Seattle, but there's enough room to grow, and they're not really competing in enough markets where I would consider them to be direct competitors. So I don't really think it's worth talking about lots much in this video. Let's take a look at my 4 questions before investing in a company. Number 1, who's in charge? Number 2, what's the product? Number 3, what are the financials? Number 4, who else is involved? Now, if you guys remember 2 weeks ago when I talked about Kubient, I mentioned that the founder was still involved with the company. Same thing with Shift. The co-founders are still involved with the company and they're co-CEOs. We've got George Arison and Toby Russell. In the interest of time, I just want to take a look at these two. George Arison, co-founder CEO. He founded Shift in 2013. He builds companies, previously co-founded Taxi Magic, known as Curb, along with Toby Russell. They've co-founded the company together. He's twice been named to Goldman Sachs 100 Most Intriguing Entrepreneurs. He worked at Google, Boston Consulting. He was born in Georgia, a republic of the Soviet Union at the height of communism. He came to the US on his own in 1992, received a scholarship to attend a prep school in Maine, afterwards studied political philosophy at Middlebury College. He has a deep interest in politics and policy, went back and ran a political campaign in Georgia, authored a book about politics, and he currently lives in Palo Alto with his husband and their children. Really interesting dude. Actually, I kind of went down the rabbit hole and just read a lot of stuff about George Arison. I totally respect immigrants who come out of really rough situations and end up making it as entrepreneurs in America. That's like the embodiment of the American dream. Wonderful story. Toby Russell co-founded Shift, passion for building companies that leverage user-centered technologies. He was a managing vice president at Capital One, worked with Boston Consulting Group, spent time in public service, leading a $12 billion renewable energy and efficiency investment program for the U.S. Department of Energy, director of research for U.S. Senator James Jeffords' re-election campaign, fluent in Russian and Spanish, doctorate in international relations from the University of Oxford. Oh, just Oxford. A BA in political science and Russian and economics from Middlebury College, father of 2 girls. Both co-CEOs, family guys, incredibly intelligent, successful people. They've been together a long time from college through their other businesses, now with Shift. So it's kind of like 2 heads are better than 1 in this case, where you have 2 guys that clearly have their goals aligned, cooperating to run this company. One of the things that sets Shift apart from its competitors is the intended demographic that it's going to serve. This is from the Needham Investor Conference in January, and the question, what is your target demographic?
Our user base is very heavy in millennial and generation that's younger than millennials. It's very young, and that's been something that's been true for Shift for a very, very long time. And it's not like we actively sought that. It just so happened that millennials really love using this product. So those are two kind of core things. I think the reality is that as much as women feel very discriminated against in the car purchase process, and so they're like, as a result of historical experience, they're very accustomed to, hey, I have to bring my husband or I have to bring a man to the car purchase process, and unfortunately, women kind of come into the purchase process with that view. Our kind of long-term goal is very much like, hey, we want women to feel very comfortable buying a car from Shift, just like a man would feel comfortable buying a car from Shift. And we think a software-driven solution to that is the best. That's a long-term goal. That's not something you're going to achieve immediately. So I don't want to say like our target demographic is women because we're not there yet. But we certainly want to be in a world where women feel like, yes, Shift is very safe and I don't have to worry about anything. And I can buy a car that way, really, really easily.
They're actually getting a lot of millennials on the app, and that the app gives women a unique opportunity to not feel discriminated against in the used car buying process. Before anybody rages at that, you could go on JSTOR and see several studies about how historically women have been discriminated against in the used car buying process, or at least they feel perceived discrimination. Whether it's discrimination, perceived discrimination is completely irrelevant here. The fact that they're feeling it is what's relevant, because a consumer makes purchases based on what they're feeling. Shift is giving women the opportunity to buy a car without any discriminatory practices through online means, and Shift is the only one in the industry that's offering test drives to all of its customers. So that's why Arison went on to talk about women there, because Shift is providing something to women other used car apps aren't specifically providing. Now, it's not a target demographic, it's more of a fortuitous benefit of the way the Shift ecosystem is set up. One thing I noted about Arison in this interview is he's not wearing a suit, and I was like, oh, investor presentation not wearing a suit. And then I kept doing some research on him and I found out that he's just not a suit guy. This is a beautiful picture from his wedding, and you could see in his wedding he's wearing jeans and sneakers. And not just sneakers, those are some New Balance dad shoes right there. Question 2, what's the product? So this is their investor presentation from their website. You can see their process here. Their mission is to make car purchase and ownership simple: research, test drive, purchase, ownership, selling. And they emphasize this is a cycle because they want to keep the same customers for the lifetime of the car so they can repurchase the car, resell it again. They do their inspections in-house. They offer omni-channel sales. Omni-channel, there's the word again. They really stress in their literature the consumer cars offer the best inventory. That's because of the way they geographically locate. They end up taking used cars from a certain geographical area. Cars tend to be popular by geographical area. So a used car taken in San Francisco has a high likelihood of being popular in San Francisco and then resold in San Francisco. It kind of makes sense. They have regionally focused logistics. This reduces fulfillment costs, makes it cost efficient, streamline inventory, improved mix. They can centralize their software, and it's easier for customers. Their goal is to create these logistics centers. They can cover the same area as Carmax. Carmax is denoted with all these little C's, but they can do it with fewer locations, which reduces their expenses. Now, here's their differentiated strategy. This might be the most important slide in the entire presentation. They target aged vehicles. Shift focuses on 3 to 5 and 6 to 10-year-old vehicles. They concentrate not just on older vehicles, but on lower priced. Shift focuses on vehicles that are in the less than 10K to 10 to 20K range. They focus on the largest segment of the car market. Now, this is proportion of car listings by the age of the car. 1 to 3 years, Shift only has 25% of their cars here, whereas Carvana is 48, Carmax is 50, Vroom is 68. For car listings by the age, 4+ years, Shift 75%. Obviously, what's 100 minus 25? Carvana would be 52, Carmax 50, Vroom is 32. Proportion of car listings by price segment. For the under 10K, 16% of Shift's cars, 1% for Carvana, 2% for Carmax, 0% for Vroom. 10 to 20,000, this is Shift at 64%. Over 20, Shift is at the bottom with only 20%, whereas Vroom is up here at 79%. Shift focuses on less expensive, older used cars. Vroom focuses on more expensive, newer used cars. Carvana and Carmax are both in the middle. Customers prefer the Shift experience. Shift's e-commerce customer experience is consistently rated higher than traditional auto retailers. Net Promoter Score, customer satisfaction, Shift is sitting here at a 70. Carvana is 82, Vroom is 52. 52. At the bottom of the presentation, this is their multiple levers to growth: third-party strategic inventory and marketplace. This means Shift wants to partner with those small dealerships that make up 44% of the TAM. These small dealerships might have a hard time getting their inventory online for various cost reasons. It's not easy to just make an app. So if they partner with Shift, then Shift can benefit because they get a distribution center out of the dealership. The dealership can benefit because they get wider exposure for their cars. Shift takes a cut, the dealer makes less profit, but the dealer would also rotate through their inventory faster. Inventory rotation in the used car market is massive because dealerships have to pay taxes on cars that are on their lot at the end of the month. So dealerships want to rotate their inventory as fast as possible. In addition to that, used cars lose value quickly as they age. So if a dealership buys a car that's 3 years old, sits on their lot for 6 months, it's already like 17% older by the time they sell it, which means it's going to have a proportionately lower price tag. Both parties would benefit in this case. This is their investor letter to shareholders from Q3. When I read this letter, which by the way is like 28 pages, remember guys, I do all the boring work so you don't have to. I understood that Shift isn't just selling cars, they're selling customer satisfaction. And I know that sounds cheesy, but let me read you this. The overarching theme of the new Shift brand is embracing and celebrating used cars, unique in a category that pushes consumers to purchase new vehicles. Buying a new car is a trap. Even if you think you succeeded in haggling through the industry's opaque and discriminatory pricing approach, the moment you drive off the dealer's lot, you proceed to lose thousands of dollars on average with rapid depreciation. This is not true when you buy a quality used car from Shift. It was this insight that inspired the company's new brand. By being driver-centric and tech-forward, Shift is challenging the traditional model to give consumers a better used car buying experience, one that they can feel good about. We proudly celebrate and champion the value and quality of Shift used cars and the savvy customers who buy them. Now, they talk about building a relationship with their consumers and building a brand that they love. Now, this sounds cheesy, but people are emotional with purchases. Oftentimes, people will make purchases at a store they like even if the product is more expensive. Shift is trying to create a loyal customer base by offering equitable access, low pricing, and a good experience. Now, this is all well and good and it's easy to say, but how do you measure customer experience? Now, this is a website called Consumer Affairs, and they take customer opinions and give companies a rating based on the qualitative measures of those customer opinions. Carmax has a slightly under 3-star rating. Carvana, slightly over 3-star rating. Vroom, not even 1.5-star rating. Now, on Consumer Affairs, Shift is not listed yet because it's still relatively new to public trading. But you can see with the industry leaders, Carvana, Carmax, sitting right around 3 stars, there's room for improvement in the customer satisfaction area. Vroom, not even 1.5 stars. Come on, man. Are you even trying? Still, that doesn't give us a direct comparison to Shift. So I thought, let's go on the Apple App Store and look at those reviews. Carmax, this is on the App Store. We've got a 4.8 out of 5 star, great rating, and that's out of 275,000 ratings. Makes sense. It's been around for a long time. Carvana, 4.5 out of 5. Not as good as Carmax, but still pretty damn good, and that's out of 26,000 ratings. Vroom, 2.5 out of 5 out of 75 ratings. Man, Vroom's really slacking here. Shift, 4.8 out of 5 with 3,500 ratings. So right now, Shift is tied with Carmax for the best app rating. Customers typically use app ratings to describe not just the physical app itself, but their experience with the company. So roughly, we can correlate these two and say the app rating is about the same as the customer sentiment on the company, in which case Shift is a leader in the industry. Question 3, what are the financials? This is on FinViz here for Shift. We've got a share price here of $8.01. $8 has been a pretty strong support line back from December, basically. Market cap of $681 million. Insider ownership is 25.8%. Institutional ownership, 51%. These are both incredibly high. Shares outstanding, 82 million. Float, 64.6. Shorted, 6%. Those metrics are good. Their third quarter earnings report, 31% year-over-year revenue, 85% year-on-year, reached a record of 59.9 million. Their units sold was up 34%. They have higher expenses because of marketing. But then they went and gave this incredible fourth quarter guidance. We now expect fourth quarter revenue to be another record in the range of 72 to 75 million, representing 163% to 174% 100% year-on-year growth, the strongest revenue growth rate in company's history. So the guidance they provided at the last earnings report is that we're going to have a record fourth quarter earnings, which is being reported on Tuesday after hours. Question number 4, who else is involved? This is their insider ownership. Lithia Motors, which is a dealer partner of theirs, one of the biggest investors, does own 27 million shares, which is a huge percent. Their CFO is also a former Lithia employee, furthering the ties between these two companies. Transaction history, there's no sales here. Awards, purchases, exercises, but there's no actual sales. Just in November, we had more insider buying. The COO, Foy, Victoria McInnes, George Arison, the co-CEO, buying more shares. Institutions, Goldman Sachs, Aramark, Vanguard, Luxor, BlackRock, Millennium, Fidelity. And we've got a ton of ownership here with Vanguard adding them to a bunch of ETFs, and this just happened at the beginning of March. Now, I mentioned one of their investors, Lithia. Lithia is an automotive group that helps them with funding and also provides data on auto sales and trends to them, which helps them further their efficiency. Lithia is in like the S&P 400. It's one of the strongest auto sellers in America. They're headquartered in Oregon, and they operate 180 stores in 18 states. In the future, Lithia is probably going to be helpful for helping Shift expand to different states because it can provide them with a little bit of an inventory immediately in those states. This is from a Seeking Alpha article, a bullish article on Shift. The author went through and pulled out of the earnings reports for all of the competitors the enterprise value, website visits, projected revenue for 2021 based on forecasting, and the multiples in their growth. Right now, out of Carvana, Vroom, Shift, Carmax, the multiple is lowest for Shift based on their value and their projected revenue in 2021. Their growth potential is staggering, and this indicates that this is an incredibly undervalued company at its current share price. Let's do a little SWOT analysis here. Strength, weakness, opportunities, threats. Strengths. Shift offers a wider inventory of older used cars that are typically cheaper. This gives customers more of a selection. Also, they have an app. Currently, it's only available on iOS, not Android, but the app uses back-end AI with machine learning. You can take the used cars on a test drive with Shift. None of the competitors offer that. You have the backing of Lithia Motors as their largest single investor and as a company that already spans 18 different states. This could, in the future, help Shift expand and also gives Shift data on auto sales. Weaknesses. The competition is the weakness. We have already Carmax, Carvana, Vroom, other competitors that are doing similar things competing for the space. Another weakness is that any car sales, including used car sales, are capital intensive. You need to have a lot of money up front to carry out your sales. In fact, it's one of the most capital intensive industries out there, along with maybe real estate and mining. Another weakness is that they're regional. Right now, it's just the West Coast, Washington, Oregon, California, and Texas, starting with Austin. Opportunities. The TAM is a huge opportunity. We have an $800 billion market, of which e-commerce in auto sales is less than 1%. That provides room to grow for many companies. Also, Shift has a little bit of a niche, a little bit of a moat. They're the only car seller that's focusing on older used cars, cheaper used cars. Threats. Used car sales are capital intensive, and Shift doesn't have a huge amount of revenue right now. Used car sales may slow down after this boom in purchasing during COVID. The high expenses that Shift is using for marketing, they're not just focusing on entering new markets, but they're focusing on saturating markets that they're already in, which means they're trying to outcompete CarMax and Carvana and Vroom in California, Washington, and Oregon, is that they don't offer any in-house financing and insurance. Now, this is kind of a double-edged sword. Captive F&I is a boon because it gives you a higher profit margin because you're the one that's collecting the money from the loan. It's not going out to the bank. But also, it's a negative because you have to have more cash set aside for the insurance aspect of it. Shift isn't large enough for that at this point. Carvana is. CarMax is. They have the in-house F&I. Shift doesn't. So that's kind of a threat in that their competitors are only going to get larger, taking advantage of the extra money from in-house F&I, and it's still years away from Shift being able to manage that. So what's my play? I view this as a huge value opportunity. I'm going to be going in for about 100 shares, and something different, I'm also going to be going in for about 5 call options with the March 19th expiry. I want to get some of the at-the-money call options, and I'm going to be very quick to sell them because the overall market is very unstable. I think Shift is going to have a really good earnings report, and with the COVID stimulus passing, the market sentiment's going to be pretty positive. Those two events, I believe, are going to coincide, and Shift shares are going to rise earlier this week. I'm not going to carry those calls to expiration. Instead, I'm going to sell them as soon as they're up about 20 to 25%. So I'm going to be very conservative, play the at-the-money calls, close them very early. 20 to 25% gains are my target. I'm going to read the market. If it feels like I'm only going to get 10 to 15%, then that's what I'm going to take. I don't want to be stuck with those calls sitting on them until March 19th. I'll keep the 100 shares and see how their earnings go for the next couple quarters. I do think this is a company that is an attractive buy, and I'm not the only one that thinks that. I want to show you guys what some of the analysts are saying. Now, I want to take a look in the Webull app. On Shift here, we can see the price, $8. I want to go to the analysis tab here. You can see there's 7 analysts covering this company. We've got 2 strong buys, 3 buys, 1 hold, 1 sell. Analyst price targets are ranging between $7 and $20, but this is the interesting one. The reason I'm opening this on the app is because it's not available on the desktop version. It's only available on the mobile. But this is the position cost distribution for all shares purchased for this company, and this is accurate as of March 5th. Now you can see most of the shares that are purchased at a higher value with an average value of $9.04. Right now we're sitting at $8.01. So this gives you a lot of security knowing that people tend not to sell at a loss. And if you open a position in Shift right now, most people are going to have an entry value much higher than you, with the average price being 12% higher than the current price. Also, if you're interested in something on the Webull app here, on the analysis tab, you can see the short interest and the days to cover, which for Shift, it's not really that important because it's only 6% shorted. And we actually see a decline in the amount of short interest over time, which means the shorts are pulling out of Shift, which could actually be a bullish sign. They don't want to short the stock anymore. And right now we're down to 2 days to cover. Short interest is only at 3.9 million shares. There you have it. I hope you guys enjoyed the video, found it informative. I think this is a really good hybrid growth / value play with the current stock price. I want to thank you guys for watching. If you enjoyed the video, as always, please like the video, subscribe to the channel, and if you want to be alerted to all my content as soon as it goes live, hit that notification bell. Also, if you want to support the channel, please use my Webull referral link located below the video. You saw me use Webull in this video today for my analysis at the end. You can use it for so much more. They give you the news, they give you the financials all through the app. If you use my referral link, deposit $100, you get some free stock, I get some free stock, everybody wins. Because I'm in their partner program, I actually get a free stock valued of at least $30 or higher. So you're basically sending me $30 for free. I like it. All right, guys, I'll see you next week. Have a good one.